Hello everybody, and welcome back to another edition of the Forex Market Preview. And if you are brand new, I just want to thank you so very much. We continue to grow beyond my greatest expectation. And I would never have known all those years ago when I started this little weekly review that, what is it now? Was it 8 years later now, or 9 years later, whenever, I can't remember when it was, 2008 or so, when I started putting these things out. I never would have thought that we would have amassed the group of people that we have here. And now, just this last week, broke 60,000 subscribers. And I'm grateful for every single one of you for the fact that you come here and that you check this out and that you find value here. And I appreciate the kind words that you guys share with me. And I promise as long as you guys keep coming back and being part of it, I'll continue to do this free video for you. And hopefully you can gain a little bit of insight. Now, if you're new, what we try and do here is I try and teach you a little lesson and talk with you a little bit about what's happening in the market and to give you a couple of ideas on where I think there might be some good opportunities to make some money. Sometimes I'm really, really right, and sometimes I am really, really wrong. And that is I guess there's a lesson in there too. That's the nature of trading. Is sometimes you hit the nail on the head and you get the feeling like you can't do anything wrong. And then other times, you're doing the same thing that you were doing when you were making money, and it just doesn't seem to be happening. I call it, you go from being the golden boy to being the pauper. You go from being a guy who everything you touch turns to gold, and then all of a sudden one day, you just nothing. And you're banging your head against the wall going, what is going on? And then that starts to affect your psychology and your decision making. And then one bad decision leads to two bad decisions. And the next thing you know, you're doubling down on positions, changing trading strategies, and you're wiping out accounts. And so one of the things that I harp on, no matter what you're doing, is that you both identify what it is you're trying to accomplish. You identify a trading strategy that has the least amount of subjectivity you can possibly have. So some trading strategies, when you start talking about structure, there's more subjectivity, and it's more difficult to eliminate subjectivity. One way of looking at this is when we talk about anchor legs or in advanced pattern recognition, X to A legs, right? There is a subjectivity to that. And one of the things that we have tried to do over the years is eliminate as much of that as possible. But unfortunately, it's very difficult to get rid of all of it because you're trying to eliminate subjectivity from something that is very much a discretionary observation based on historical perspective, right? And that's a really fancy way of saying the more you look at the charts and the better you are at reading the language of the market, the more effective you will be at effectively picking out patterns that are profitable. We have, however, whittled down the what we call the ROE, or the rules of engagement, to a point that doesn't leave any subjectivity once that particular aspect of it is taken out. Now, if you use something different, like you like to use RSI and MACD or Bollinger Bands or something like that, anything that you start using indicators for, now all of a sudden you can begin to eliminate subjectivity. So when I say eliminate as much as you can, what you need to constantly be going through, and what I always recommend people do, is they use an if-then thought process. So they try and think of, what if I was going to write a computer program and I was going to tell the computer what I wanted it to do? Well, when you write computer programs, you tend to write them in kind of this if-then construct, which is, okay, if you see this, and then this happens, then do this. Or if this happens, then look for this. And if these two things are both there, then look for this. And if these three things all occur, and they all occur this way, then I want you to do that. And so you start thinking about, okay, as you're writing out the trading plan, you start thinking, okay, if the market breaks into a new structure high, okay, well, what is a new structure high? How do I define that? And then once we've defined what a new structure high is, well, now we've eliminated subjectivity. So we don't have to question, when we come to the market, whether or not the market's made a new structure high. And then we say to ourselves, okay, now that the market has made a new structure high, then I want to look for a 382 retracement. right? Something like that. And you start building this case for, or I want to look for the market to go into an overbought condition on the RSI. Well, what do we consider overbought on the RSI? Well, let's first ask the question, what period are we looking at on the RSI? Are we looking at a 7 period, a 14 period, a 28 period, 61 period? What period of the RSI are we looking at? And then what do we consider overbought? Do we consider a 60 overbought or 70? Do we consider 80 overbought? To give you some example of the way we have modified this, I like to use a 7-period RSI, and I consider 80, above 80 to be overbought. 80 or above, excuse me, to be overbought, and 20 or below to be oversold. Now that's different than a standard RSI would be a 14 period with 70% being overbought and 30% being oversold. I want a more extreme rating, but I want to look at a much lower time period. So instead of looking at over 14 bars, I look over 7. Right? Now, why do I do that? Is it so much better to use a 7-period RSI than a 14 period? No, I don't think so. It's just when I started to put it together, number one, it was one of the ways that I was taught when I was learning how to trade. Was one of my mentors used a 7-period RSI with 80-20. And when I started to apply it, I noticed that, yeah, I do like the fact that it gives me a little quicker reading on my RSI. But more importantly is once I had assembled my trade plan and once I had lined out those if-then rules to try and provide me with some non-subjective ways to look at the market, I could then go back and test that. And what I found is that when I use my set of non-subjective rules, and I use the RSI with a 7-period, overbought being 80, oversold being 20, and I trade that consistently, my historical testing shows me that that delivers me consistent profitability. Does that make sense to everybody? Guys, there are a million ways to make money in this market. There really are. I go back to Larry Pesavento, and some of Pesavento's early works were on really like astrology. And then he moved into Fibonacci, and then he moved into pattern recognition. And just the wealth of knowledge that is contained in those early works, even though you could tell at the time that you're reading that, compared to what we know now, it wasn't as detailed. It was something that the science was coming to. And you go and you read those early works and you learn about astrology and how it was being employed in the markets, and you think to yourselves, and then you read things like Market Wizards, and you read stories about these very famous traders, one of which looked at the stars and looked at how the moon of Jupiter aligned with Mars or whatever it was, because I don't understand any of it. And you start to recognize just how incredibly versatile trading strategies can be, and how expansive they can be. You can do anything. But what you have to do is you have to write out the rules and you have to test it. Now, what we learn here is really very simple stuff. I focus in on structure analysis. I like to use Fibonacci, and I use RSI. And really beyond that, there's not much there. I don't claim to have a monopoly on good trading strategies. I don't claim to be the best trader in the world. But I have a passion for what we do here, and I love teaching. I really love it. And I love hearing from you guys when you write back to me and tell me that, it's making a difference. And so what we're going to cover today is just a couple of things. We're going to look first at Euro USD, and I'm going to give you a little bit of an idea here about what I'm looking at, and then we're going to look at pound dollar and then Aussie dollar. And I know I've already been talking here for almost 9 minutes, so I apologize, but I just wanted to share a little bit with you. So looking at the daily chart now on Euro USD, we can see this last week we came into a double top scenario here. So market came back up into structure, we held there, and on Friday we pulled back a little bit, right? Now, if we know we're back up against previous structure resistance and the market has initially held there, we can drop down to, say, a lower time frame, maybe a trading time frame, and we can make some decisions. Now, you can ask yourself, and one of the things you probably should ask yourself is, am I a trend or counter trend trader? It's tough to be both. You could be both, but it's tricky. So am I a trend or counter trend trader, and what do I consider to be the trend? Do you see all these questions you have to have answered? And if you're wondering why things aren't going the way that you really want them to go, one of the things that you can look at is your rules. How subjective is what you're doing? So once you determine, well, I consider to be with the trend being the, the higher time frame, for example, then any trade that you take to the downside or to the short side on this is going to be a counter trend move, right? Because this market has already shown that it's acting very bullish right now, back up into structure. But if you're looking at it and saying, well, I think that this is a little relief rally before the market goes higher, I'm a trend trader, or I call a trend continuation trader, because we're even a little more conservative than your average trend trader. I like to be right more often than I'm wrong. And to do that, you kind of have to modify trend trading rules because it's tough with markets are not in trend that often. So what we do is we modify a little bit. But let's look at one. This is something that we talk about in the syndicate every single week. It's one of the 3 trades that we take inside of the syndicate. It's a Fibonacci inversion trade, and it employs a little bit of Fibonacci, a little bit of reading of structure, and so on. So we've had a little bit of a pullback here. The market's hit that resistance level and it's come off of that level. We got a little rally and now we're pressing back down against structure support. Now, one of the things that I've learned and that I found to be a very effective strategy is simply looking for, I'm going to bring my Fibonacci extension tool in. I'm going to do what's called a Fib inversion, and I'm going to invert the most recent leg of the move, which is this kind of retracement here. Let me fatten everything up so you can see it a little bit better. And what we're looking for is a little press down, this retracement followed by a rally, followed by another press down, and we're looking for the market to come down into this area around the 1618 extension. And again, I've always found that simpler is better. And so I don't have a lot of complex rules. There's not 15 pages of if-then thought process that I have to go through. I just simply look at the market to make a bounding move down into a 1618 extension, to watch that market go into an oversold condition, and then look for a buying opportunity in the direction of the underlying trend. Now, whether we look at the daily time frame or whether we look at the hourly time frame, you can see this market has been bullish, and now we're getting a correction. Now, there's a couple of different ways I can trade this. I can trade it based off trend continuation to the downside because the market is breaking structure, or I can look for a rally and be part of the overlying or underlying trend. In this particular case, what I'm looking for is the market to cycle down into a 1618 extension and then to rally. And so as you go into Monday, let's just see if it works, right? And as I said, sometimes it's beautiful, sometimes it doesn't work. The important thing is consistency. So let's see if the market will press down into this 1618 extension, and let's see if it'll rally out. I'll give you an example of this. This is something that we looked at on Friday in the syndicate in War Room, Pound New Zealand. Same setup, right? Market made a low, it rallied back up, and then it sprung up into a 1618 extension. Look left, look at the structure here. Previous structure support. You got a resistance level up here. And so opportunity to short the market right there at the 1618. And you can see right at the end of the day, we got a little bit of a pullback. So this is just a very simple strategy based on a little bit of Fibonacci in anticipation of the market continuing in its previous trend after a relief rally. Make sense? Okay, let's move on. Go back out to the daily chart here on pound dollar. You have a butterfly formation setting up. Okay, market comes down. We rally back up. We pull back, and now we're looking for a press up into the 127 extension. That would be a short on the 127 extension, looking for the market to press back down. Now it's nice because this is in the direction of the underlying trend, isn't it? So we get that little relief rally, boom, back up, and now we get the press down. And you say to yourself, well, Jason, could I trade that like a Fibonacci inversion trade? Well, you most certainly could. Let's grab our Fibonacci inversion or Fibonacci extension tool here. Let's invert the last leg of the move and back down in. What do we see right there at the 127 extension? We have 1618, 127 ratio confluence coming in right there at that termination point of the butterfly formation, right? Makes sense? So it doesn't matter whether you're trading the Fibonacci inversion trade that we just looked at or the butterfly formation, both of them setting up for a sell at roughly the same place and looking for a press back down. If you need even more evidence of it, one of the things we can look for is what I call measured moves. So we have swing low to swing high, and we're going to look for a one-to-one measured move in that same direction. And if this market pulls back and then rallies again, what are you going to see? The market's going to rally, equal distant move, one-to-one measured move, up into a 1.618 extension, 127 ratio confluence. Same setup. So it doesn't matter how it is. We just covered like 2 or 3 different potential methods that you can use to analyze the same chart. And I know I went through it fast. Watch the video again if you need to. A lot of people will understand it. Some people will be confused depending on how long you've been in the market and how much study you've done. Just stick with me. That's one of the reasons you need to subscribe and come back and watch the video every single week, is I try and give you a little bit of, open your eyes up a little bit to what's happening just below the surface. Too many times people have their charts covered in indicators and oscillators and all kinds of garbage. They can't even see the structure. And so if what you need to do is you're like, Jason, I'm just not ready to do that yet. All that mess, just back and forth and back and forth. Hey, you've got a structure resistance coming up right here. You can play this as it rallies back up into the structure resistance level, wait for a potential reversal, be it a doji or some other candle formation, and you can look to say a sell there. The sky is the limit. What's the most important thing? What have I been harping on for roughly the last 2 months? Have a plan, test the plan. Don't trust me. Don't take my word for it. Go out and test it for yourself. And then, guys, if you struggle with it, if you're looking for help with it, that's why Trade Empowered exists. That's why we're here. I'm not trying to push you into anything. You don't have to buy anything from us. You can go to Trade Empowered, and there's thousands of dollars worth of free information and training there for you, to use at your discretion. We've got free trading strategies there. All kinds of stuff, no matter where you're at in your trading. But if you're ready to take kind of a full bore approach and you're ready to say, you know what, I'm ready, I really want to commit to this. I really want to understand about trade plan development and money management and technical analysis and how all of it kind of works together. That's why we have the training course. That's why it's there. And we got a whole team of people who are really excited and anxious to be able to support you through that journey, because they're people who have been where you are. They're people who have experienced what a difference learning how to do it right and learning how to treat it like a business can make. And I'm lucky enough to work with some of the most honorable and well-respected people in the industry. And so regardless of what you want to do, go to Trade Empowered, watch some free videos, check out the YouTube page, watch a ton of free stuff of great value, or sign up for a course or sign up for the War Room. It's up to you. No matter what happens, I'll be back here to do this all over again next week. Until then, good luck, good trading. I'll talk to you soon.